Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we saw the week kick off with gains across the board for the major indexes. But Justin, some key economic news looms large.
Yeah, I'm not sure I want to step in front of this train, but we'll take a look at some of the stocks that were moving today, including Caterpillar, also JB Hunt in the trucking area, and Catalyst Pharmaceutical in the biotechs. But yeah, we'll definitely talk about some of the headlines that are coming up too that are offering a warning.
Yeah, stepping in front of a train. Is it going to be all aboard? Climb aboard? We'll have to see what happens later this week. But first, let's analyze the major indexes today. The Nasdaq up 1.3%, but even stronger was the S&P 500 up 1.4% today. The Dow taking the lead with blue chips up 1.6% today. Small caps lagging a little bit, but still up 1.1% today, Justin. So if you take a look at this chart here, by the end of the day, we did get a little bit stronger. This is slightly delayed here, but we have a trading range that is being formed at this point. So it seems like all eyes are now looking ahead to the key news happening later this week. How is the economy dealing with inflation? What's the Fed going to do about it? So a lot of investors going to be looking to that to make some trading decisions as the week progresses.
Yeah, and the tough part here is for all of these headlines that are out, it's not just about the headlines themselves. It's not just about the CPI number itself. It's about the reaction to it. I mean, just look back at October 13th, where we got a CPI number that was not very good, and the market did tank at first, but then really came back strongly. So what happens a lot of times is, look, if you had given me the headline ahead of time, I still don't know that I could play it right because the volatility that's been going on has just been on the extreme side. So we've got the CPI report that's coming up tomorrow. We've got the Fed meeting. Now, the Fed funds tool on CME is basically saying, look, everyone's expecting a 50 basis point hike for the most part. There's still a chance for a 75 basis point hike. So even if that's baked in, there's always the statement that comes out, the press conference. I mean, that's what has been really kind of leading to a lot of the volatility after the Fed meeting is more what Jerome Powell talked about
I
in the
think
press
this
conference than
was a
anything else.
Powell presser, right? On
Yeah,
11/10. This was
uh-huh.
a speech, a Powell
Yeah, that was in
speech that
Jackson Hole.
day.
Hmm.
So yeah, it doesn't mean that even if we do get a move to the upside, that's even going to be sustainable. Could
Exactly. In
be.
all of those
We don't know yet.
cases, yeah, in all of those cases, we had a move and then there was this counter move. And so, as much as it's great to look at a day where you had a 1% gain almost across the board on all the indexes, you still look at what kind of destruction we saw last week. And this looks like a blip. It just doesn't look like that much. And I understand that the indexes are going to be getting updated, but it's still, even with the update, I just don't think this is a big move of the needle,
Right.
and especially with the news that's going to be coming out the next couple days. And let's not forget, we also are going to have another quadruple witching. That's going to bring some volume in on Friday as that options expiration happens. Volume is something that I find has been lacking in a lot of the stocks I've been looking at least most of today. There were some setups that I was interested in. Again, tough to buy ahead of the news, but there was no volume in a lot of these names.
Yeah, so we're taking a look underneath the surface, and it's painting a picture for us. Let's also take a look at the S&P 500 as well. Got turned away at the 200-day line last week. It's now getting back above the 21-day line and approaching that key level at 4,000. So it seems like to the upside, that's the next hurdle to clear.
Yeah, and it looks like we closed about 10 points away from that today. So looks like we were at 39.90, and so that has some you know a little bit more room that it needs to make. And then right after that 4,000 level, you are going to be facing the 200-day moving average line yet
Yeah.
again, and that has been a very persistent line that hasn't budged yet for the index more than a couple days.
And so while the resistance at that key level maybe not surprising to us, could also this be interpreted as a pause here with a pretty strong move off of lows? I mean, to see a digestion of the gains at that point, again, maybe not too unexpected to see, give stocks that have been running a chance to set up either handles or new bases, add on buy points, pulling back to keep moving averages. So is there a cup half full view that we can take here, Justin?
The optimistic part of me is that's exactly the way I'm looking at it. When you see those 4 down days that we had, right, in a row, and really culminating in a big drop below the 21-day moving average line, what I liked about the next day was that it just seemed like the selling stopped. And so here we are going a little bit sideways. We're not blasting out of here. It's not like one of those V-shaped bounces or recoveries. We're just kind of settling along this 21-day moving average line, and that can make a good prospect for a lot of stocks to have more of these setups, these handles getting tacked onto some of the bases, and that could be a very good thing. Now, if you want to go on the glass half empty side, this could just be a little pause before the next shoe drops. So
Right.
one of the things that is great about tight areas, it kind of gives, or trading ranges, it gives you an area, it gives you some goalposts, but then it's up to the market to kind of decide, well, which way are
Which
you going to go? Are you
direction?
going to go on that upper side of the goalpost or the lower side? And that's one of the things we just have to wait and see.
But being prepared for those different scenarios, I think, is pretty critical. Let's also take a
Absolutely.
look at the Dow today, which has been leading and outperformed today. So seeing a bounce right here at the 21-day line. Again, hard to make big bets in either direction ahead of what could be a potentially big catalyst. Which direction, we don't know. But this feels like a setup that we're keeping close tabs on. It's stocks that look like this.
Yeah, and there's definitely a lot of the industrial names that have been getting more of our attention. But I'll just go ahead and add into the mix here. Let's go ahead and take a look at XLU real quick, just to throw that in. This
Don't
was
ruin it,
outperforming a
Justin.
lot of the indexes, and utilities outperforming the indexes. That just doesn't give me a lot of confidence.
Yeah.
So that there is a little bit more of a defensive nature, a defensive bent still to this market, and it's a little bit tough to get too excited
Right.
about a strong rally when you've got a lot of these defensive areas.
Utilities surging. Yeah.
Mm.
Elsewhere in sectors, let's take a look at XLE. So energy getting a little bit of bounce today after some pretty solid losses last week.
Yeah, it was a lot of destruction. And on IBD Live this morning, we talked about how in the Growth 250 of MarketSmith, which is an automated screen, I mean, it's like 33 screens all wrapped up into one, but a big move away from oil and gas in our own IBD Live watch list, which is culminated by a number of individuals. So it's us looking at it with a human element, a lot of moves away from the oil and gas area. So while the bounce is nice here, I mean, there was a lot of destruction that it's got to recover from. So it's a little bit too soon for me to tell whether or not this is indeed an opportunity. As you're showing XLE here, I mean, it does look like a cup with handle, but
Still
the
needs some
energy
work.
area, the oil and gas, has been one of the strongest moves of the year. Is it tired, or
Yeah.
is it just another opportunity that we're facing? So again,
hmm
after last week's destruction, I think we need to wait a little bit
hmm
to see what happens there.
If we do see further deterioration, would a meaningful drop below this 40-week line be any sort of tell? It hasn't perfectly held above that, but that has pretty much contained this move.
Yeah, I think that will be very notable. That last base that you
Not that we
saw
want
in
to
the
wait until then to do
right,
anything
right.
about it.
Yeah, I mean, for a lot of us, I think we've been playing a little bit shorter term.
Yeah.
For myself, usually by the time it gets to the 40-week moving average line, I consider that late. But
Yep.
I'm also not holding anything really long term right now. This just isn't the market for me to play like a bull market. But
Hmm.
for XLE, that last move was down. That base was 30% depth, and so we're tacking a handle onto that. But for an index, that's pretty steep. That's a pretty
Hmm.
deep base, not something you normally see. And a lot of the stocks in the group, whether it's the U.S. explorers and producers or drillers, they saw 40% plus bases, which is a little bit on the high side.
Right.
So that just might need a little bit more time to kind of digest that big base that happened.
Okay, we'll see what happens. Let's also quickly take a look at the 10-year Treasury yield on the weekly. So we saw an upside reversal last week, kicking off this week with more gains here, Justin. But that didn't hold back the market today.
Yeah, it's been funny how it's gotten a little bit this
Yeah.
correlation between the the correlation between the yield or the negative correlation, I should say, between the yield and the stock market has been kind of disconnected here. So yeah, we got both of them going up today, the market and the 10-year Treasury yield. But of course, this is one of those things where the more this 10-year Treasury yield goes up, the more you would expect growth to be having some trouble, right? Because those future discounted cash flows and everything do weigh on this. And look, we're all looking at what is the Fed doing. Of course, beyond the inflation and beyond the yield, there's this whole idea of the recession that is potentially coming. With the yield curve so inverted right now,
Hmm.
so many people are looking at what kind of hopes can we have for this recession to truly be a soft landing, or are we looking at something that could be hitting much harder? And the truth is, no one knows the answer to that question.
Yeah, exactly. All right. Well, maybe we'll get a little bit more clarity coming up here in a little bit later this week. But now let's move on to take a look at a couple of stocks of interest. We talked about how industrials are in focus right now, including Caterpillar, CAT, machinery, construction, mining. Those are areas that we've been focused on lately. And so Caterpillar here today with a gain of 2.6%. Volume was light though. And in some of your opening comments, Justin, it seems like when you're looking at watch list stocks or stocks on the move today, that was seemingly a common thread. And I will note, full disclosure, I do have a small position in this one right around that 21-day line as of a couple days ago.
Yeah, and that's a great place that it's getting support right now. So while today potentially could have been actionable, just if you're kind of looking at, hey, this is something that's moving and getting support at that 21-day line, we have been trying to get a little bit more of these early entries, these bounces after weakness as opposed to breakouts.
Right.
Here again, the trouble is you didn't have much volume today, and you've got the CPI report and Fed coming a
Mm-hmm.
little bit later on. So again, it was just a tough day to kind of stick your neck out, but this is one that continues to act orderly. The base that we just saw was only 30%, and while you could consider that a breakout that didn't really go anywhere, it really tightened up. So I'm kind of looking at this as potentially setting up still. And if you kind of see a move here strongly, uh, industrial just seems like where a lot of the strength is, and so this would be high on my watch list. Not normally something that we're talking about with our growth orientation, but you got to trade the market that you have, not the one that you want.
Mm-hmm. Yeah, and estimates not as strong for next year, but that's the case with a lot
A
of
lot of
companies. But at
at
least,
least they're positive, because
yeah,
that's better than a lot of companies out
yeah,
there right now.
exactly. Okay, and moving on, JBHT. So in transportation, we saw a number of these stocks on the move today, and it looks like had a really strong close here, strengthening throughout the day. We checked in on a couple of these on IBD Live this morning. Looks like we did get some strong volume here, Justin, on an
Yeah.
early entry.
Yeah, so I mean, trucking certainly was not doing well for a while, and it looks
Yeah.
like there's been a more recent surge. I didn't see any news happening. This looks like a news day, right?
Hmm.
I didn't see any news, but there certainly was a lot of volume in here, a lot of buying going on, and this did arguably kind of cross over a trend line that you've drawn there. So this looked pretty good. It was recently getting support right at its 200-day moving average line. So this is what we would call kind of a bottoming base.
Hmm.
Not as strong as some of the other names out there. You see that relative strength of 67 for the relative strength rating. And the relative strength line itself, while it's close to recent highs, it's still not quite there. And this is not up at its highs, but it's not too far. And so given where a lot of stocks are still below their 50-day moving average lines, their 200-day moving average lines, this one isn't looking too bad. And the fact that it's kind of crossing over this trend line that you've drawn on the weekly chart, you can see a shorter term trend line on the daily chart. That was interesting looking to me, and it's not alone. We also saw ODFL, one of its cohorts, that was also moving strongly. And it's also worth noting that this transportation truck group has been moving up strongly. It's now number 28 out of 197. So there's certainly a group move that's been happening lately in terms of strengthening and moving up those ranks.
Hmm. Yeah, and that's definitely showing up in this group chart as well. And I mean, Justin, I feel like with the rotations that we've been seeing from on a sector level, industry group level, et cetera, getting those entries near the 10-week and even the 40-week line,
Mhm.
of course, they don't always work, but as you said, we've just really been focusing on those early entries. So
Yeah,
something to
and
keep
the
in
reason is
mind.
because so many of the breakouts have been looking a little bit more
Yeah.
shaky. So you,
Right. If you wait for JB Hunt to climb another 14% before you're
yeah,
looking at it, you know. All right. And last but not least, CPRX also on the move today. Biotech stock kicking off the week with a gain of over 6%. Did get some above average volume here. This one has been a little bit tricky with some reversals here on the chart, but a pretty compelling move today.
yeah, and this is kind of the latest personality of this stock as it kind of makes a move, pulls back to that 21-day moving average line, makes a move, pulls back to that 21-day moving
Mm-hmm.
average line. So the problem, and this is something that's having an a recurring issue in a lot of stocks, is they're making these very big moves in a day or two, and then they're not really doing anything.
Mm-hmm.
So if you're not holding through,
Right.
sometimes you're not participating, but it's
Sort of
tough to
that
hold
hit and run
these.
trade,
Yeah,
right?
the hit and run trade, right? Exactly. So, so yeah, this is just another example of that. The biomed biotech area is still one of the strongest areas out there. This is an area where both the IBD Live watch list has been still focused, and
Mm-hmm.
that automated screen, the Grow 250, has also gotten a lot of names in there. So, you look at some of the ETFs like IBB or XBI, and they might not look as strong, but remember, this is a big group.
Oh, yeah, it
For
is.
us at Investors Business Daily, the industry group contains 800 names, but they are not all equal. You've got your
Mm-hmm.
winners right now, and I would count CPRX among them, and
Mm-hmm.
then you've got a lot of stocks that are still very developmental stage,
Right. Speculative.
kind of low in their ranges. So it's definitely worth kind of separating those out and saying, okay, what are the strong ones in here, and
Mm-hmm.
how much of that speculation are you okay with? There are a number of these that don't have much of a pipeline. They don't have drugs that are approved yet. They're maybe not as far along in their clinical trials as opposed to something like CPRX, which is getting revenue and
Mm-hmm.
earnings. It's a
Yeah.
profitable biotech.
Yeah. And some pretty strong double-digit estimates there for not only this year as it continues to make its way through 2022 and 2023 as well. All right. Well, thanks, Justin, for that analysis. And thanks, everyone, for tuning in. We'll be back with more tomorrow morning on IBD Live. So please join us, investors.com/IBD Live, for all the details with David Ryan, 3-time U.S. investing champion and protege of IBD founder Bill O'Neill, back on the show. It'll be great to get his take in this key week. So we'll see you there. And we'll also see you right back here tomorrow at the close.